Hey, everybody, it's your boy, Sean McLaughlin, at Options Sean on Twitter X. This is the Options Jam session for January 23rd, 2025. Hope you guys are doing well. I'm getting pretty excited about this weekend, as you can tell by my hat. Let's go, Bills. All right, so this is the Options Jam session. What do we do here? This is a show where we review any action, any activity that may have taken place amongst the trades that we publish in All Star Options. We talk about any positions we've exited, whether it's for a win or for a loss. We talk about any adjustments we've made to existing positions. Then we also review updated stops for positions that we have on that are hopefully going our way. Usually they're going our way, and that's why we're updating our stops. And then we touch on new trades that we've put on since we last spoke. And so let's get into it. But before we do that, of course, I have to drop the old disclaimer that everything we're discussing here is for educational purposes only. I'm showing you what I'm doing with my money, and I'm hoping that you learn something along the way. Okay, so let's start here with the VIX. You can see here VIX with a 14 handle. Let me zoom in a little bit here. We are just, for the past week, just going straight down more or less. We are threatening to break down to the lowest levels of the year. Why is that important? Well, it's important because when the VIX is low, that generally means that investors are not scared. And when investors are not scared, then they're not going to interrupt their dollar cost averaging programs, and they're just going to keep putting money into the market. And that generally will cause stocks to rise. Doesn't mean stocks will rise, but generally speaking, if people aren't scared, then money continues flowing into the stock market, which eventually pushes prices higher. Stocks go higher, bulls win. All right. Now, does this mean we can't have a spike out of nowhere? Well, of course we can, especially with the new administration we have that loves to juice the stock market with all kinds of headlines. Who knows what can happen, right? But for now, the volatility index is signaling to me that there's not much fear out there in the market. And to me, that's incredibly bullish. All right, so let's go into positions we've exited or adjusted since we last spoke. In no particular order here. Let's start with some bad news. Not terrible news, but bad news. Our Disney position. We got into a call calendar spread in Disney back in late December. We were at the 125 strike. We had shorted the March calls and purchased the June calls at 125 strike. We paid $3 for that trade. Well, our line in the sand was 108. And if we saw a closing price below 108, then that invalidated my trade. And we got that close on January 16th. So at the next day, sometime near or after the open on the next day, that's when we exited. And we got out for $1.73. We paid $3 on the way in. We got out for $1.73. Not a terrible loss. But we're out of Disney for now. We may revisit this trade, but it's got some work to do before it gets me interested again. Okay. Fez, this was a bullish risk reversal we had on in January options. Fez is the Euro Stocks 50 ETF. We had gotten into this trade in early November or mid-November, November 13th to be exact. We had sold the January 46 puts and used those proceeds to pay for the January 49 calls. All in, we actually collected a 3-cent net credit to get into the trade. Well, it was a little bit of a wild ride here. You can see here we got in on the 13th. It looked like it was going to just cruise and become a big winner for us. But the market rolled over on us, and it looked like the thing was dead. But then it rallied again. And here on January 17th, we exited the trade. Why did we exit the trade there? That was the expiration day. That was the day these calls expired. So we had to close the trade on the 17th. I closed the January 49 calls for $1.75. I just let the 46 puts expire worthless. So I got out for $1.75. So I entered the trade for a 3-cent net credit, closed for $1.75. So that's $1.78 in profits on this trade. Not bad. Not bad. I feel pretty good about that trade. Hopefully some of you participated in that one as well, but we are now out of Fez. Boy, it's still going. Wish I was still in it, but we had January options and that's it. All right, last trade that we've exited since we last spoke is DMRC. This is Digimarc Corp. Similar to the Disney trade, this was a call calendar spread. We were long the June 55 calls. Wait, hold on a second. I have confused my brain. We did not exit this trade. No. I was looking at this. I'm like, wait, we have not broken our stop loss level. No. Sorry, we did not exit this trade. We've just rolled our calls forward, our short calls forward, as we laid out in the details of the trade plan when we published it on day one. So on day one, when we got in on January 6th, I believe, we sold the February 55 calls and we purchased the June 55 calls, and it cost us $5 net to get in. Okay. Well, here yesterday, January 22nd, we rolled our short 55 calls to March, which is the next month, and we collected 95 cents. Now, why did we roll those calls? Again, according to the plan that we laid out, I wanted to roll these short calls if and when they were offered lower than 50 cents. Because once they got offered lower than 50 cents, that means there wasn't that much more premium for me to collect. And so I wanted to roll those out another month and bring in additional credit. So that's why we rolled yesterday. The calls were offered at 45 cents, I think, when I looked. So I rolled them to March, same strike, and I collected 95 cents for that roll. So now essentially we're in a March-June call calendar spread. But our net cost now, our net exposure is 405, because remember, we paid $5 on day one. We just got 95 cents back. So 405 now is our net risk. So we've improved our position. We've lowered our risk. We're still in a position to profit here. And if it gets up to 55 at some point, if it gets there while we still have short options on, then we'll just close the entire spread and book what will likely be a profit. I don't know how much that profit will be. It'll depend on how close we are to the expiration day of those short options. But the plan is, if we get to 55, that's where we will take profits and close the trade. But for now, we're holding steady. But you can see here, I'm still sticking to this stop loss level at 39.50. We breached it intraday briefly on the 14th, and we kissed it this morning. But I want to see a closing price below 39.50. If we see a closing price below 39.50, that's my signal to exit. And depending on when that happens, it's possible we still might walk out with a profit in this trade due to these short calls losing value faster than the long calls. That's the beauty of a call calendar spread. So stick with us on that. Stand by. I'll have updates on this trade in the All-Star Options chat room, as I always do. In fact, I told everybody yesterday that I was going to roll these calls when I did it. So feel free to do that. Get into the All-Star Options chat room. If you're not in there, what are you doing? Are you even trying? Get in the All-Star Options chat room. It's not just me talking in there. There's other subscribers of All-Star Options in there, asking questions, reacting to trade ideas that I publish, sharing some of their own ideas. And other people are trading off those other ideas too. It's great. It's a great community. It's getting better every month. Please join in. If you're not joined, shoot us an email, info@allstarcharts.com. We'll get you signed up. All right, let's update some stops. We have 4 stops to update here in no particular order. Let's start with NVIDIA. We got earnings coming up with NVIDIA, so something to be aware of, but we have a defined risk spread on. We paid $8 for a March 140, 180 bull call spread. So far, it's working. It's got more work to do, but it's working for us so far. But I'm raising my stop up to 129, which corresponds with this most recent low. I don't want to see NVIDIA get back below 129. If we see it close below 129, that's my signal to exit the trade. We might get that following earnings, but my feeling is if we zoom out here, zoom out a little bit over a year, the long-term trend for NVIDIA is up. And what I've learned over the years is that surprises, I don't know if you could call earnings a surprise, but surprise moves in stocks tend to happen in the direction of the underlying trend. That doesn't mean that will always happen, but if there is a big move in NVIDIA following earnings, chances are that move will be higher because that's the trend of the underlying, that's the underlying trend over the past year. But again, if I'm wrong, my risk is defined. The most I can lose is the $8 that I paid on day one, and I'm okay with that. But earnings can be the catalyst here to get us to the promised land. All right. So for now, 129 is the level. I don't want to see NVIDIA close below 129. Next up is Hood. Similar trade to NVIDIA. We have a bull call spread. These are in June options. We're long the 40 calls, short the 60 calls. With Hood trading at 50 bucks, we're right in the middle of our profit zone, which is great. But I'm raising my stop now to 38. 38 corresponds with the last significant low before its most recent high. That also roughly corresponds with its rising 50-period moving average. I don't want to see Hood get back below 38. If it does, we'll exit the trade and salvage whatever is left in the premium. I do have a resting order to sell this spread for 16 bucks. 16 bucks. The most of the spread could be worth is 20. That's the difference between the strikes, right? Between 40 and 60 is 20 bucks. That the most I could sell the spread for would be $20 at expiration or close to it. But I'll sell it at 16, which is 80% of the full value of the spread. I'm not greedy. I'm not greedy. If I can get out at 16, I'll take my profit and move on to the next trade. That would be, better than 3x, close to a 4x return on my investment. I am happy with that. For now, Robinhood, our stop is at 38. Next up, SMTC, one of our more speculative semiconductor plays. We are also long a bull call spread. Noticing a theme here? We're also long, we're in July options. We're long the 70 calls, short the 100 calls. We paid $6.50 for it. The position is moving our way. We are sitting in profits now. We want to start protecting those profits if we can. Well, I suppose this wouldn't be protecting profits, but we moved our stop up to 64. If SMTC closes below 64, we're likely exiting this trade for a loss, but it shouldn't be that big of a loss. But 64 is the level I want to see it hold. Okay. All right. Last up, Grab. Now, this one's a little different. You guys may remember a couple of weeks ago, we had a stop at 450. Now, you've heard this from me. You've probably heard this from many trading experts over the years. When we have a stop in place and you're long, let's say, you never want to lower your stop. You only want to raise your stop, right? If you're long a position and you have a stop and the stock's going down and you just lower your stop to keep yourself in the position, that's a recipe for disaster, right? That's how bad things happen to good people. Now, I lowered my stop. I lowered my stop for one reason, and I'm comfortable doing it for two reasons. I lowered my stop because the 450 was our stop, and then we had this close below. But as you can see, we chopped really close around that level for 4 or 5 days, and it felt like it was going to hold. That doesn't mean I can predict the future, and maybe we go lower from here. But that chopping level at 450 just did it felt like the market was trying to find its footing right there. Now, I chose 440 because that felt like, okay, 440 is the level. We didn't really close below 440 at all. So that's the new level. That's the real level. That's where the stop should have been all along. But I was comfortable doing that for two reasons. Number one, I have a defined risk trade on, right? If Grab gaps down to $2 tomorrow or goes to zero, it's fine. I've got a defined risk trade. I paid 40 cents for these calls, and that's the most I can lose. You can see it right here. When we got into this trade back in late September, I paid 40 cents. Okay. I don't want to lose the money I have, but that's the most I can lose. And I sized my position accordingly. The second reason why I was comfortable lowering my stop is that even lowering my stop, I was still comfortably in profits in this trade. Okay. I don't know what the calls are trading at right now, but we are in the money right now. And so the fact that I was in the money, my risk was defined, and the fact that we were chopping pretty consistently in this level, all those reasons added up to giving me confidence to lower my stop. Now, I don't do this often, guys. I rarely do it, and I don't advocate for people to do it. But sometimes you just have to know when to break the rules. And maybe I'll come to regret it. Maybe we'll get a gap down here, maybe an earnings event or something, or some news out of China, because this does have some Southeast Asia exposure. Maybe we get a gap down and I will regret not having gotten out of it sooner. But I'm giving this trade the benefit of the doubt because it has worked. It's in the right sector, I think. We got good reasons to do so. All right. So that's it on Grab. Last up, let's talk about our new trades that we've put on since we last spoke. I don't have the trade details up on these charts. If you want the trade details, head to allstarcharts.com, head to the members section, head to the options section. There you will find detailed trade plans for every one of these trades. What I like about the setup how I'm trading, what option strategy I'm using, how I'm sizing my position, where I'm stopping out, where I may or may not be taking profits. All of those details are laid out in every trade plan for every trade that we put on. So with that said, I'll just go through these real quickly. QS, QuantumScape Corporation, not a quantum computing name, despite quantum being in its name. But we put a bullish trade on here. It's not working yet, but we got a plan, and maybe we're a little bit early, but we're playing for a bounce here in this QuantumScape. It's also a heavily shorted name, so we think if this thing does start rallying, we could get a short squeeze. So far, it's not working, but our risks are defined, so it's okay. Next up, NET, Cloudflare Inc. We got long a few days ago. So far, so good. It's breaking out above a key level. I like this. I'm feeling pretty good about it. So we are bullish NET, N-E-T. Next up is Amazon. Amazon breaking out to new all-time highs. Yes, you heard that correct. All-time highs. I love all-time highs. If you guys have been hanging out with me for any length of time, you know that my favorite trade in the world is to be along a stock that is making fresh all-time highs. There's no bag holders in a stock making all-time highs. Everyone who's holding a long position, regardless of your time frame, whether you're a scalper, a day trader, a swing trader, or a long-term investor, when a stock is at an all-time high, everybody is making money. That means no one's in a hurry to sell, right? Everyone's feeling pretty good about their position. Meanwhile, any unlucky souls who are holding a short position in a stock making an all-time high, the only way they can make the pain stop is to buy the stock, and they will be fuel for higher trades at higher prices in these names. So I love stocks making all-time highs. So I am positioned for more of the same with Amazon. And lastly, AEM, that's Agnico Eagle Mines Limited. We got into this trade yesterday. This trade, you'll definitely want to consult the trade plan with this one. This one is a little tricky. There's a lot of moving parts here. But the beauty is that options give us options, and it gives us a way to play this trade for the long term, or play this name for the long term. So definitely check out that blog post if you haven't already. We got there's some steps there. And if you have any questions, of course, hit me in the chat room. I'll answer your questions as best I can. All right, everybody, let me bring up the old slide here. For those of you who love these slides, the updated stops, we already talked about them, but take a screenshot if you need to. Those are our up-to-date or updated stops in some of our existing positions. And lastly, I've said it before, but I'll say it again. If you have any questions at all, whether you're a subscriber to All Star Options or not, or a subscriber to any All Star Charts products, doesn't matter. If you have a question, shoot me an email. I'll do my best to answer it. info@allstarcharts.com. That will get routed to me, and I will do my best to answer. If you're not involved in All Star Options, here's the link. I put it also in the chat, in the YouTube chat. Click on Get All Star Options and get involved. We'd love to have you part of our community. And lastly, if you like the charts that I'm sharing, head to TrendSpider.com and use promo code Sean50 to get 50% off a subscription plan to TrendSpider. Those are the charts I use. I think they're pretty cool. I think you will too. All right, folks, that's all I got for you. Have a great rest of your week. Go Bills this weekend, AFC Championship. Let's do it. Next week's going to be a little weird. I'm traveling. The whole All-Star Charts team is traveling to New York City for our what do you call it? 3 times a year annual, or 3 times a year event for the Portfolio Accelerator members. Not sure how we're going to handle the jam session next week. I got to get with my team and figure that out, but we may try to do it. I may try to record it from my hotel room, because I don't want to leave you guys hanging, especially if we have a busy week. So stay tuned. I'll keep you guys up to date in the chat on that. I think we'll probably do it. We'll figure out a way. All right, guys. See you next time. Until then, go Bills.